You're now streaming. You're live.
Live? Okay, awesome. It says setting up, so hopefully, there we go. I'm being redirected. All right. So, hello everyone. Laura Nelson here with Keller Williams Realty. I am here with Tim Klotz. He is our stats guy. He gives us some great information every month on what's going on with our market. Last month, we did Brentwood, and today we're going to do the Antioch market. So I just wanted to jump on real quick, Tim, before you mention anything about what's going on, because we're going to go over the July stats. And I know we're almost at the end of August, so it's going to be a little bit older information, but at least, it's something and it gives us a direction on where things are going. But currently, right now, I just looked up what is on our MLS, and there are only 62 homes on the market in Antioch right now. That's it. So it's crazy. And there's 199 currently pending. And then in the last 30 days, we've had 122 homes sold. So just some interesting current statistics there. And I'll go ahead and send it on over to you, Tim, to talk about what happened in July of this year.
Yeah, thanks, Laura. Appreciate it. I'm going to go ahead and share my screen with you so we can look at some things. And I'll kind of talk about all the different stats. So, just to kind of summarize for those that are watching, I'm going to look at a couple different snapshots from different time periods. So the first snapshot, I'm going to do a 2-year time frame. Then I'm going to show a 1-year time frame, and then a 6-month time frame. And the reason for showing 3 is so we can kind of see a trajectory. Real estate's not really an exact science. Though when we look at comps, when we look at, what's for sale, what's sold, what's under contract, we have that information. But realistically, a property that is sold, so if you're doing comparisons on solds, a sold property is something that got into contract at least 30 days ago, meaning if it closed today, it would have gotten into contract 30 days ago. And 30 days ago, there may have been a week or 2 worth of negotiation, and then it may have been on the market for a week or 2 or 3. So when you see a property that's sold, that's indicative of activity from, almost 2 months ago. So, for sales are really what we look at for like real time right now, because if it's for sale and it hasn't gone pending yet, that kind of gives us an idea of what's happened in the market. So I look at 2-year, 1 year, and 6 months. We're going to look at median price. We're going to look at inventory. And then we're going to look at a cool little graph that's called months of supply of inventory. And I'll kind of go over the specifics of that. But, this will kind of give you an idea of what's happening. So what you're currently looking at up on the screen is the last 2 years. So right up here, it says 2 years monthly from 7/1 of 18 to 7/31 of 20. So our stats are gathered from a program called Broker Metrics, and it gleans information directly from MLS. So this is all MLS data that's all compiled. So this isn't Keller Williams specific or Zillow specific or Tria specific. It's specific to MLS data, so it's everything. So down here on the bottom, the 2 different colors you're looking at red and green, hopefully, unless you're colorblind. So the red is for sale median price. The green is sold median price. So it takes all the sales that have happened in an area and averages that. Okay, so if you come down here in July of 2018 for sale homes, 449. In July of 20, so 2 years later, it's 485 for sale. So we listed them at 449 in that was the average list price, the median list price in 18. And now we've gone up $36,000 in what we're listing them for. What's interesting, and that's an 8% change in what we've listed them for, what they've gone on MLS for. What's interesting is when you look at the sold. So sold median price was 445 back in 18. It's 487,500 now. So we've gone up about 42,000 in median price. That's about a 9.6% increase. Now and that's over a 2-year period of time. So what's cool to look at that is, if you bought a home in 2018 and you sold it in 2020 and didn't really do anything to it, you had about a 10% gain in your value. So, Antioch, and this is Antioch specific, and this is all homes. Now, of course, when you work with a great realtor, like Laura, she can even get more specific on your numbers. So let's just say, you own a home that's, let's say is worth 800,000. Well, you're not going to comp it against, you're not going to, comp it against the 445 number or the 487 number. You want to find homes that are more similar to it. So that percentage of change, that 10% equity, may be higher or lower. So that's why you work with a realtor. This just gives us a general idea. Over the last 2 years, we've seen a price appreciation of about 10%, 9.6%. So, that kind of gives you an idea. So, and then again, this is over 2 years. So if we go and look over 1 year, 1 year median price. So same basic statistic, just instead of look over a 2-year period, we've taken the last half of that 2-year period and we're looking at the 1 year period. Now that 1 year period isn't going to change. That 487,500, that number is not going to change. It's just the last half. You take 2 years and you look at the trajectory growth. Well, that's a 10% trajectory, okay? But if you just take the last 12 months, you'll see down here, that's 3.6%. So you can actually say that from July of 18 to July of 19 was a better growth, better equity growth than July of 19 to July of 20, because we only went up 3.6%. So trajectory shows us evidence that it's actually slowing, okay? Not good or bad. It could be caused by a lot of things. I don't know if if you guys have watched the news or anything, but we're in this thing they call a pandemic. And that started in March, March 17th, good old St. Patty's Day. That started then, and we've kind of been in it since then, and that has caused a little wonkiness in our market. So, if you look, that's March right here. So the last 4 or 5 months, that's going to considerably affect what's going on. And that's why I say I look at the 2 year, I look at the 1 year, and then I look at the 6 month. The 6 month will give us a clear idea, has COVID affected us? Because we've got buyers that are saying, oh, I don't want to buy right now because the market's going to crash. We have sellers that say, oh, we want to hurry up and sell before the market crashes. Well, I'm indifferent to whether the market crashes or not. What I really focus on is evidence, and the evidence is based on price point. So you saw a 2 year, this is the 1 year, so 3.6 compared to 9.6. So you can see that it looks like things were slowing. Now, let's look at the 6 month and see, well, was there a big change in the last 6 months of the last year? So we did a 2 year period, and then we did the last year, and now we're doing the last 6 months of that year. So it kind of gives us a trajectory. Well, what's interesting, I'll blow this up a little bit bigger so you can see it. What's interesting to see that 3.6%? So that's the last 6 months. So what we can see with evidence is the last year, the trajectory has remained at 3.6. So for all those buyers that are out there, all you that are looking to buy and saying, well, I'm going to wait till the market crashes. Well, we're arguably in one of the most strange markets we've ever seen, and it hasn't changed. 3.6%, and the real number is 488,625. Remember, it was 487,500. This is just within the last 12 weeks. So it tightens that number down a little bit. So is it a good time to buy? Absolutely. Is it a good time to sell? Absolutely. What I'm looking at here is just trajectory. Market's not crashing. We're not falling apart. California's not sliding into the ocean. We're good. Everything shows that we're good. And on top of that, this is median price. Okay, so median price in California is rather interesting. For any of you that are looking at this that may not be in California, our values in California are a little skewed. It's not necessarily based on what I would consider true value. So true value would be like, if my house burned down and I had to rebuild it, would the cost of those materials equate to value? Well, not really, because, you know, our weather takes into account and our economy takes into account. So, you know, what our number is based on is demand, supply and demand. So I look at median and I go, okay, you know, we're pretty solid at 3.6%. Now it's time to look at units. Is, you know, are we going up in units? Are we going down in, meaning units for sale, units sold, you know, and units is each property that has sold. That's a unit. So whether it be a condo, whether it be a home, or, you know, whatever it may be. So, you know, let's go look at, you know, 2 years worth of units. And this is a fun graph to look at, because you can like visually see the what we call seasonality, which, you know, most everybody wants to sell their home between, you know, April and July. That's the time frame when, you know, kids are getting out of school and weather's good and, you know, everything's good to go. The least likely time to sell is the winter time. Okay, so you can kind of see, I mean, without getting into the numbers, you can see the trajectory. See, you know, we come July, August, September, you know, we peak out and we come sliding back down during winter, and then here we go climbing right back up and out, and then here we go coming right back down. Well, what's interesting is this last little section right here of 2 years. Okay, so this compares this time of the year 2 years ago to this time of the year now. Okay, so in July of 18, we had for sale 317 units. For the month, that's how many we had for sale for the month. We had 317. And in July of 20, in July itself, July of 2020, we only had 232. That's a 26.8% decrease in the units available for sale. Now, you know, I'm not a rocket scientist, you know, but I can tell you my 5 years of 5th grade math tells me that if I've got a 26.8% decrease in property available for sale, I did take an economics class, that's probably going to drive price. Meaning you have 25% less for somebody to buy, yet our demand's pretty high, because if you look at under contract, that's gone up 8%, 7.9%. So if you add these two together, which is the reality of our of where our inventory sits, we're really at like 35% difference in percentage change. So all in all, we have more demand for less supply. So we can see that prices are probably going to go up. So if you're a buyer, you want to look at this and you want to understand, well, why do I have to pay more for the house now than I did 6 months ago? Because we just ran into this pandemic, right? We should be paying less, right? Less people should be wanting to buy home. Well, no, this is evidence to why that's happening. And what's leading to a lot of this is we're getting migration. Now, normally migration's used to talk about lemmings and you know, things like that migrate from one geographic location to another. But in real estate, we talk about migration where people from the greater Bay Area are moving to the suburbs. And this pandemic has supported that, meaning how many people do you know that are working from home? Do you want to live in downtown San Francisco paying $4,600 a month for a 1-bedroom, 1-bath on Market Street? Or do you want to own a beautiful 5-bedroom, 3-bath home in Antioch for $500,000? Meaning your monthly payment on that probably going to be around, you know, $3,000 a month, maybe $2,500 a month. Doesn't take a rocket scientist to say, well, if I'm not commuting, I can live wherever I want. So this gives you the 2-year snapshot. So again, you can see that's 2 years. Now I'm into, you know, a 1-year period of time. So let's look at that real quick. Again, this is just Antioch. You know, this doesn't include the neighboring cities. I know last time we talked about Brentwood. Most of the time, cities are similar. I will tell you, Antioch has a lot more movement in it because it tends to be more affordable. What causes it to be affordable? You know, who really knows? It's, you know, desirability. It's, you know, resources. Resources in the real estate world look like grocery stores and schools and things of that sort. So what's fun about this one is you can see, we did July of 19, we were moving along just fine. All of a sudden, November, December of last year, we ran into a little bit of a crunch. Well, what caused that? Remember, red, what's for sale? Well, remember, China was dealing with this epidemic. Europe was dealing with this, pandemic, whatever you want to call it. And then what happened was we started, figuring it out. And then come March, we hit, the quarantine. Well, what's interesting is if you look at the for sales in just the last year, we're down 33.7%. We're even more down over the last year than we were over the last two, which is interesting, right? Our solds are only down 14.9%. So if you're, and this is units, so you're down 14.9% in units sold, and you're down 33.7% in units for sale. Well, that tells you that more people want to buy a home than homes available. Okay. And so you want to know why you're having to write, multiple offers on multiple properties if you're a buyer? This is why. There's less property available for sale. If you're a seller and you're looking for top dollar, great opportunity to get top dollar. Realize there's some things that are outside of us real estate agents' control, and that's called an appraisal. And when banks see all these numbers right here, they tend to be conservative on what the appraisals come in at. Yeah, they have some control over what they ask the appraisers to do. So just be aware, a lot of this is out of our control. I just look at evidence and say, okay, are we growing? Yeah, you can see our green, which is solds over the last just 3 months. You can see the solds are going up. You can see the pendings are going up. That's the blue. But you can see that our inventory right here isn't necessarily going up at the same speed at which this is going up. At some point, we're going to have such a low inventory that people are going to have to start getting creative with writing the offers, or sellers are going to get to the point where they can command a pretty hefty price. Now, if I go to 6 months, which again is just half of what you just had, 6 months in units, doesn't get too exciting because it's exactly what you just looked at. But again, I look at trajectory, and trajectory is what is the path of something over a period of time. So if something's growing real heavy at the beginning of 2-year period, and then all of a sudden the last half it's starting to come down, well, that gives me the trajectory, which tells me which direction the market's going in. And if the market's going up, going down, I mean, because none of us, I know that most of the general public figures that when we show up at an appointment to talk with people, they expect us to get out our crystal ball and shine it up and and look at what are we going to see for the future? Well, honestly, our future view comes from our evidence from the past. So that becomes our challenge. So this is a pretty good indicator that we should all be looking at, pretty seriously. So this line right here represents the middle of the last 6 months. So this is the last 12 weeks. This red graph that you're looking at right here is units for sale, okay, over the last 12 weeks. Does anybody see a consistent pattern? Okay, now look at the consistent pattern of our solds. Okay, now let's really shock you a little bit. Look at the two numbers here. You're down in for sale. So the trajectory in the last 12 weeks, we're down 12%, 11.9% in units coming on the market for sale, okay? But our solds, the properties that we're selling, were 37%. Now, 37% in and of itself is a huge number. That should be concerned right now. I mean, it's like, are they giving away free sets of Ginsu knives with every house that you purchase? I mean, what's happening that's causing people to buy homes, What's interesting is when you look at this, at some point, our solds are going to meet our for sale. And it's going to be about 6 weeks from now, if we continue on the same course. So why is that a challenge? Well, if you're a buyer and you're thinking about buying a house, realize it's only going to get more competitive. So you'll want to work with somebody that's educating you on what this looks like. If you're a seller, You want to work with an agent who's closing lots of transactions, because they're going to tell you what appraisals look like. They're going to help you negotiate for the best contract. Okay. And remember, best contract doesn't necessarily mean the highest amount of money. It could mean the highest propensity to actually close escrow. Okay. So the last set of graphs that I'm just going to show is called supply inventory. Months of supply of inventory. The standard definition of a month of supply of inventory is if not one more property went on to the market from today moving forward, how long until we would run out of inventory? Okay. Now we just looked at units, and it was clear that we're looking at about 4, 5, 6 weeks based on the trajectory that we're going to be out of inventory, because our solds are going to meet our fails. But this graph literally takes all that evidence and puts it in a place where you can actually see it. And obviously everybody in the world's on Zoom. That's why this is spinning a little longer than usual. But it's what's going to happen is you're going to see, and what you're going to see is the months of supply graph is going to show that we're only sitting with about 2 weeks of current inventory. Now, is that a challenge? Well, yeah, of course that's a challenge. But the reason I bring it up is not to scare somebody or not to shock anybody. It's just so you understand that you have to listen to the professional when the professional is telling you how to organize an offer to get it accepted. You have to listen to the professional on how to get a great pre-approval from a lender and work with lenders that can actually close the deal. So the bar graph that you're seeing is months of supply of inventory. So currently in 2020, and this isn't going to change, July of 2020, you're going to see 0.5 a month, so half of a month is how much inventory you currently have. See the trajectory right here, the last 3 months, okay? So you have 2 weeks. So what time frame is this? This is the month of July. So what day are we at in August? Well, we're what, the 23rd, 27th, I don't know, somewhere late August, right? So is it possible that, when we pull August statistics, that's going to show that we have 1 week of inventory, or that we have 3 days of inventory? We only put this out here so that you get educated on why it's so challenging right now to get an offer accepted on a home. Why maybe you have to choose a home that's not perfect. I've moved a lot, I've bought a lot of homes, and I've never bought a perfect house, including a brand new house. So just mindset. The blue line, those are days on market, okay? Average days on market. And you can see this has been following the trajectory of months of supply of inventory, okay? So currently we're sitting at about 15 days on market. So if you're a seller and you're working with an agent, or you're a seller and you're thinking about selling your home, and your property's been on the market 15 days or longer, what that tells me is you probably haven't priced it right, or the condition doesn't equate to the price point you're asking. So this is where working with a great agent helps you understand how to make this work, okay? So I'll show one last graph, which is the last month, which is the last year of months of supply inventory. So it's the last 12 of those graphs popping up, and we'll see if Zoom's going to cooperate with us and get it moving forward. And it did. So this is literally the last 12 months. Still the same, still 2 weeks of inventory. What's shocking? 63.6% change. So July of 19, so July last year, we had 1.3 months of inventory. Now we have 0.5, 2 weeks. It's almost a 70% change in our inventory. Why does this matter? It just helps you understand that you may be working with an agent that is writing 2 or 3 or 4 or 5 or 10 offers for you. The market is a little challenging right now. This is a skills-based market. So you want to be working with a team, like Laura's team, in getting your offer written so that it can get accepted. Because finding the perfect house is step one. Writing the perfect offer, meaning writing an offer that can get accepted. So all in all, that's what I have for stats. You know, when choosing a realtor, please choose somebody who's been in the business a long time, and please choose somebody who's educating you on what the market looks like. So, Laura, all yours.
Awesome. Thank you so much, Tim. Appreciate your time going over that with us. It's very educational. And yes, just to piggyback on what you said, buyers, if you're out there, it's very important to work with somebody that knows the market well and can provide you with these statistics, and writing offer, you know, nice letters, or just anything that you can, you know, to be as strong as possible to get your offers accepted, tightening your contingencies. You know, all that can be done in lieu of, you know, purchase price. I mean, if you can't go any higher, there's other things that you can do to make it strong. So if you have any further questions for us or our team, please give us a call, 925-784-0905. We'd love to help with all your real estate needs. And again, thanks, Tim. Have a great day, everyone.
You bet. See ya.